It's Tuesday the 19th, I'm FX Plu and this is CurrencyTransfer.com's market update. So the headlines today are that sterling stays close to the 2018 lows, comments from the ECB conference could drive the euro, and Trump threatens more tariffs in the trade war. So sterling is currently trading in a fairly narrow trading range across most currencies. Cable saw 132.26 to 132.80 odd yesterday before closing right in the middle at 132.45. Sterling euro dipped to 113.92 before closing at 113.97, so not much activity there either. There are a few factors bubbling away beneath the surface, but nothing's really providing any impetus right now for sterling. The market is certain that the MPC meeting will make no change to interest rates and that Carney's press conference is going to strike a dovish tone. Brexit does still remain the most prominent currency driver at the moment, as both the economy and the monetary policy will both be reactive to Brexit in the longer term. And a confrontation is brewing in Parliament here. If there is no Brexit deal, then the upper house wants Parliament to debate and vote on the next steps. But meanwhile, the government wants Parliament to just do whatever the government decides. And all this, of course, is ahead of the EU summit due next week. And any firm proposals for the future relationship have yet to see the light of day. So plenty going on in the Brexit camp behind the scenes, one would hope. Euro dollar remains close to the 2018 lows as well, closing yesterday at 116.25 against a slightly weaker dollar. We may see a little reaction for the single currency today when ECB chief economist and President Draghi are both due to speak from the three-day ECB meeting in Portugal. They're not due to speak on monetary policy, but expect both to be questions about that and the ECB plans all the same. And then in the US, the trade war has moved forwards once again between US and China. The White House has threatened a further 10% tariffs on about $200 billion worth of Chinese goods, and Beijing has countered, saying they will respond with qualitative and quantitative response. The rising trade tensions have hit the dollar, and the dollar saw a drop against both the yen and the Swiss franc, with that classic safe haven trade playing out as the global risk appetite is affected. Domestically, the US economy is growing close to trend and employment is improving nicely, despite inflation continuing below the government target. But despite all of that and last week's rate hike, and indeed the hawkish minutes that surrounded that, it's foreign policy which is really the primary driver for the dollar at the moment. The dollar index fell yesterday to 94.70, pulling back from the resistance that we're seeing firming around 95.20. Any questions? Pop them in the comments below. Otherwise, I'll see you again tomorrow.